Yeah, so this week we kind of got two, I wouldn't even say conflicting, but kind of two reports that were somewhat surprising. So the first was the most closely watched inflation gauge, which is a consumer price index. That ticked up slightly to 2.7%, or sorry, it held steady at 2.7%. Forecasters expected it would actually go up to like 2.8, so it's better than expected. That, markets were happy about that. It's good to see inflation not rising at that level.
Right.
And then we also had 2 days after that the producer price index, which kind of gauges, some call it wholesale inflation, but it's a little more complicated than that. But basically, that jumped way more than expected. It went a whole percentage point up to like 3.3%. And that's, pretty well above the Fed's 2% goal for long run inflation. I think that came as a bit of a surprise for economists. They didn't expect to see such a surge. And as a result, you saw the stock market fell at open. There's also, expectations for how many rate cuts were changed, because now if inflation's ticking back up, the Fed can't cut rates as much as they would anticipate. And it's also kind of worrying because some see it as an early indicator of inflation, because it gauges kind of the producer prices,
Sure.
and not necessarily, like the CPI or the PCE indexes, which are more consumer inflation, like you go to the grocery store, this is how much something's increased. So it was a little bit of a warning sign, but it's going to be wait and see, and the Fed is monitoring it very closely, I'm sure.